Micro and Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monaco.
Hello and welcome to The Global View, the show where we look at ways for investors to make money beyond the ASX-listed universe. I'm your host, Juliette Sarli. Let's get you caught up on what happened in global equities. European markets fell overnight after China urged the EU to reverse its tariffs on Chinese-made electric vehicles. But it was yet another record high on the S&P 500 and NASDAQ indexes, while the Dow was down by 0.2%. Small caps also fell and volatility was lower. The gains, though, on the broader market as cooler than expected inflation added to hopes of a rate cut from the Fed. It was, in fact, the 29th record high for the broader S&P 500 index of the year. Tesla shares rallied after market as shareholders approved Elon Musk's $56 billion compensation package. Adobe shares also a touch higher ahead of its earnings report. Adobe has beaten market expectations in all of the past 8 reporting seasons. Boeing, though, fell on news the plane maker is investigating a new problem on some of its undelivered 787 Dreamliner jets. Sources say hundreds of fasteners have been incorrectly installed on the fuselages of some of the 787s. Broadcom shares were higher after a positive earnings report and announcing a 10-for-1 stock split, which led a rally in chip makers. And the meme stock GameStop once again making headlines, shares climbing after Keith Gill, known in the market as Roaring Kitty, posted on X, showing he now owns over 9 million shares of the company. This is almost double what he was known to hold at the start of the week. When it comes to the economic front, some more encouraging signs of inflation cooling in the States. The producer price index eased 0.2% in May after gaining by a revised 0.5% in April, the annual growth rate easing from 2.3 to 2.2%. The data coming after Wednesday's CPI read showed inflation was virtually unchanged in May. This has all added to hopes the Fed can cut soon. Meanwhile, a reading on the jobs market showed initial jobless claims rose to a 10-month high. Jobless claims up 13,000 over the past week to 242,000, above the estimate of 225,000. And the data saw the yield on the 10-year note fall to 4.25%. The 2-year, which typically moves in step with interest rate expectations, shed more than 5 basis points to 4.69%. Now, despite the soft data, the US dollar actually rose. This as investors continued to react to the more hawkish tone from the Fed after the conclusion of its meeting Wednesday. The Aussie dollar a touch lower against the greenback at 66.3 US cents. Let's discuss all the market action with Brad Gastwirth from Unearthing Opportunities, who joins me now. Good to see you, Brad. I mean, again, a 29th record high on the S&P 500. What is driving this momentum? Is it a FOMO trade, or what are you seeing?
Yeah, no, Juliette, it's a great question. I mean, there's really just a lack of yield at different asset classes. So if you're looking at returns, the equity market still is giving the best yield. And you have some really big drivers for profitability with artificial intelligence really helping profitability for large corporations. So there's some great tailwinds that are keeping this market higher. And we're also getting great results from some of these large cap companies as well.
And when you look at some of those large cap companies, I mean, hard to go by what we heard with Tesla, $56 billion compensation package. I mean, wow, Brad.
Yeah, I mean, it's a little outrageous. And, Musk sort of alluded to the fact that this was going to get passed. I mean, obviously, you had some of the largest institutional shareholders not voting for this compensation package. And truthfully, I'm a little surprised by some of the words that we had by Musk in terms of shifting chips to X over from Tesla. I think that's a concern when you look at the car manufacturer. But net, they're giving Musk the opportunity to get a tremendous pay and tremendous compensation if he executes. And if they do, he's going to get rewarded clearly.
And what do you think that then means, Brad, for further momentum in the share price of Tesla?
Yeah, I mean, there's two camps to this story. I don't think this by itself has any direct impact to the stock per se. I think right now that all eyes are on production and can they get numbers continuing to move in the right direction. The one thing that concerns me with Tesla stock is you're having an outpaced number of production numbers that have gone up and to the right, almost parabolic. But we have on the service side, those numbers not nearly increase at the same rate, which ultimately means that if you have some servicing issues, you're waiting a very long time to get your car fixed. Now, this has been a problem here in the States, and I'm hearing that this is becoming an issue elsewhere as well. But ultimately, the other thing to point to, if you look at pricing, we've seen price cuts several times at Tesla, and that's typically not a good sign for the company. So, that hurts profitability. That basically makes people question, are you having numbers artificially lifted because of cutting prices? A lot of things to look at. I think they're a great technology company. I'm not a buyer at these levels.
In terms of being a buyer at all, though, Brad, I do note that you are constructive on the further momentum for the US market, and we talked about, what is driving the rallies. I was interesting to note JP Morgan Chase thinks that this strong start will continue in the second half of 2024 as well. What do you see as the recommendation, though? Is it some of these large cap shares, mix of value and growth, or what is going to underpin further momentum in some of these indexes?
Yeah, Juliet, it's a great question, and I've been bullish on this stock market for this year for some time, and I've been talking about it on your program week after week. Artificial intelligence and that trend, we're still in the infancy, and this is going to continue to help profitability for these companies, and companies that get a significant portion of their revenue tied into AI are benefiting. So we had NVIDIA continue to outperform and put up incredible numbers. I think you still need to be long a lot of this space if you don't have exposure. So on the large or mega cap side, Amazon, Alphabet, Salesforce, which pulled back on some numbers, which I think is a good buying opportunity, Adobe, NVIDIA, I think all of these, and Microsoft as well, will benefit quite handsomely from artificial intelligence. We also recently just heard, and we're seeing this across companies, of them cutting back in terms of employment numbers, or you're having some layoffs because of efficiency. Meta just announced this, I think it was yesterday or the day before, that they're cutting off a big portion of their staff. And I think that's going to continue. Now, ultimately, this is not the greatest for the employment picture, but it does help companies with profitability. So I still see this as a positive momentum for the stock market, and I expect stocks to perform throughout this year.
What about, Brad, when it comes to the European picture? And we touched on the fact that European markets were hit by this spat with China over tariffs. Is this likely to spark some kind of trade war?
Yeah, and Juliet, another great question here. So if you look at what's happened globally with the stock markets, the macro side has had many issues over the last several years that stock markets have really just ignored. If you looked at what's happened with Russia and the Ukraine, if you looked at the beginning of the US and China tariffs, which has continued quite dramatically. If you look at what's happened, in Latin America and then the Middle East, there's so many different cross currents in terms of macro events, but yet the market has really ignored all of these things. I think that's going to continue to happen, and you're going to continue to see the market ignore some of these macro events. And I still, as I said, Juliet, I expect the markets to perform well on the equity side.
Okay, and if there is a lot of uncertainty out there, then often we look at safe havens. What's your outlook, Brad, for the likes of precious metals?
Yeah, no, good comment in here. Yeah, Juliet, I'm very bullish on gold and silver, and I've been so for a number of years, and I continue to be positive on both precious metals. I think they are a must in anybody's portfolio. I think they're a great hedge for several reasons. One, from just an inflationary standpoint. Two, for having a real tangible asset, if you can get the gold or silver in terms of bars. But ultimately, I think, if you go into draconian scenarios, they're a safe haven investment. I think they should be a must own in anybody's portfolio. And I continue to see both precious metals perform well over the next 24, even to 48 months.
All right, Brad, a pleasure to speak with you. Have a fabulous weekend when you get there. Brad Gastwirth from Unearthing Opportunities with us on The Global View. Just before we go, we are getting a check on where the local market is set to open in about 5 minutes' time, and SPY Futures suggesting a drop of 8 points or 0.1% today. Of course, we've got the BOJ in focus as well. But that does it for this edition of The Global View. Stick around, the Open is coming up next.